Weekly update of the U.S. stock market. I'm Rich Pacific Critical Point, Thursday, January 16, 8:10 a.m. Eastern Time. All right, let's begin with this snapshot, and then we'll go on into the analysis from short term to long term. Okay, for those of you who just want a quick update, basically the market is due to decline into a level 4 bottom tomorrow, but it's also due to continue to rise into a level 3 top next week and decline from next week into the following week for a level 3 bottom. That will tuck inside of what should be a level 2 up move into sometime February, down into March, up into April, May. All of that can tuck inside of an up move from this week into April, May, June, but I'm going to discuss why I question and a bit skeptical how well it's going to do February into April, May, June. But at least for the moment, we've seen a very brisk rally. Got a gap up on this hourly chart that's going to be a downside target for some people, and they may want to take profits ahead of the weekend, the very short-term traders. Some are very impressed with this run. They like it. They think things are just doing great, and the earnings season is off to a good start, but it seems like it's more the bankers that have made the money here. So I question, where is this earnings season going? And they made really too big of a deal of the CPI inflation report yesterday. All right, so those are the things we got to watch out for. And so anyways, we got this gap that we have to keep an eye on that can knock this market down. And I just wonder, how sustainable is this? Will it really move higher into next week? And we'll discuss more of that on the analysis side. Let's give you the quick snapshot here of what's going on. For level 4 intra-week to major intraday swings. Okay, they're the day-to-day pops to pops, the fluctuations during a week. Well, the model's saying sometime today it should top for level 4. This is the futures, and the futures were up a little bit overnight and now down from the overnight high. They may actually be up for the day. I don't have a live quote in front of me. But the best forecast is really ought to be going down into tomorrow, and it is overbought. It certainly can do that. But again, as we zoom out for these level 3 trends, we're thinking we've seen a level 3 bottom off of this inflation report, and it's going higher to next week. So this level 4 should only pull it back some. If it pulls it back a huge amount, it's telling us this level 3 stuff is not that bullish. Something's wrong. They're starting to change their mind after the CPI inflation report. Maybe they're getting earnings that doesn't enthuse them, doesn't excite them, that something is going to back off. But at the moment, I think the best forecast is we probably will see same to higher prices next week. Okay, I think that's enough on the very short term. Let's go to the daily chart and start looking at some of these larger swings that matter to more people. And this is the daily S&P 500 cash. Came down to the famous 100-day moving average. It's rebounding back to 40 or the 50-day moving average. I don't think it matters which you use. They're both famous. And I'm just wondering if it isn't going to bump its head in there. I think it's going into next week. It may not be able to go higher than, say, the highest price on January 6th, which was 6,021.04. So I don't think there's really much more upside to this level 3. I think it went way too fast. It left some people hanging, left them behind. Some of the bulls would have said, wait a minute, I didn't even get a chance to buy it. I think I'll wait and see. Maybe I can buy a pullback. And with the size of this gap, I mean, that's huge. That's gigantic. There's got to be some people saying, you know what, we'll probably get a chance someday to buy it below yesterday's low. So they wanted to pull back at least to yesterday's low, 5905.21. We have the 5-day average within that gap starting to turn up, acting a little bullish. We have this indicator left oversold, barely oversold, and widening its spread, suggesting chance for lingering near-term upside momentum next 1 to 3 days. Well, the model's already saying, really, if we got these level 3s timed right, and they are sloppy, some of the sloppiest I've seen in a while here, and it just had to do with year-end selling, tag selling, profit-taking, start of the year tag selling, profit-taking, but also preparing, I think, for Trump coming on board. And then there was concerns over inflation, the rising interest rates, so all these things just piled on top. And it created a little bit of sloppiness as if the market really didn't want to go down, but the net bias was more selling than buying. Okay, so we'll watch if it bumps its head near that average of 59.72 on up to the high of January 6th, and watch for a level 3 sell signal next week. But in the meantime, in theory, it should go higher. I don't know how much to trust it. Okay, it just seems like we're getting these level 3 patterns are breaking into halves, and it's making it a little more difficult to follow. It's not a real trending market where it's almost like we're trendless, that the market really doesn't know what to do, but it's quite busy. It's moving. It's moving by sizable amounts, but it can't seem to make up its mind which way does it want to go in which traction. And again, the market is waking up to the fact with Maganomics starting next week, the country is going to do something it's never done before, or if you're looking for similarities, you have to go back to the 1800s. Okay, things like that are making people a little bit jittery, even if they're for it and want to see it. They're even saying that they ought to protect themselves just in case something goes wrong first. I mean, there are Trump people out there saying we're probably going to go through pain first and then it'll be better later. And then, of course, there's the anti-Trump saying we're just going to see pain. It's going to make pockets and drafts here to knock this market down at times and then may yet put it back up. Okay, enough of that. Let's move to the NASDAQ. This is the S&P 500 futures overnight. And here's an interesting study. If we got this correct for the level 3, and we're a little shaky on how well we're timing these level 3s, if that's the level 3 and we drew this trend line from that high in the futures, which is not the true level 3 in the cash, we can see the futures respected this trend line as of this morning. They put it up to it overnight and immediately started to sell it, but it's not major selling. It's not enough to say it's going to stop. My guess is they pull it back for level 4 today and tomorrow. Next week they put it back above that line for a little while into level 3, and then we'll get the more level 3 down. But for chart watchers, they're probably wondering, was this just flash in the pan, knee-jerk reaction just like we have seen since before Christmas? If so, they're thinking this market's going all the way back down, and they're probably watching this behavior this morning. So it is something to think about. If you're more bearish and nervous than I, maybe this market's going all the way back down by next week. But the best forecast is it ought to be around this price level to a little higher by next week, and then down from next week into the following week for the next level 3 bottom. So what we're going to do is out in here, we're going to put another label for level 3 and focus it on it. Again, I do think this market bounced way too fast here. And a definition of a bear market really is you're going to see knee-jerk reactions that take back. Like if you bet on the downside in a bear market, you can see short-term intermediate moves that can wipe out 70 or 80% of your gain and nothing flat. And if you panicked and jumped out and flipped the other way over a longer period of time, you'd find out you're wrong. In other words, it just went straight up and then it went down slowly and then sustained that larger down move. So you have to be careful. So some people are probably wondering, are we really in a bear market? Because this acts a little like 2022. But it's not enough time to really be convincing about it. So I think it's going to be tricky for the bulls. I really do. But I don't think it's going to be outrageously bearish right now either. All right. Okay. We do have the Mag 7 fund to watch out for here. We obviously have big traders that look at that. We have the NVIDIA that we have to consider. So this is the Mag 7 fund on the daily chart. It's had a nice rebound, but it's really not telling us anything different than what we see in the major index. This is NVIDIA. It's had a big setback. It's trying to recover. Has a long ways to go. The record high this year is too late for a long-term top if NVIDIA trades like the stock indexes, and it may well because it's so popular that it just becomes automatically computerized like an Android to get in line with the indexes. So it does tell us probably later in the year we'll see higher NVIDIA prices. But in the meantime, though, if it's like the stock indexes, it still has to find kind of minor long-term bottom. So it can have sizable declines only to recover later in the year, which means it could be quite sloppy for some time here. All right, so now what we want is we've shown you futures here for the S&P 500. The NASDAQ cash daily can rally, yet it's dragging its feet relative to the S&P 500, but it can rally to this trend line by next week and then still come down for a level 3. That's what we're looking for. Up in the next week, pull it back. Okay, but at the same time, we're wondering about this half cycle of level 3s when these level 3s are just sloppy. That's all you can say. They're having a problem here. People are trading faster and more short term. They're not comfortable with setting still for a sizable move. So we do have to watch out for that. This is the NASDAQ futures, and it actually looks fairly constructive here. Looks a little more calm than what I showed you on the cash, and that may just be the scaling of this chart here. But we've moved a bunch above some famous moving averages, well-watched moving averages, and this indicator's acting bullish, so we'll give it a chance into next week. I just got to warn you, something can go wrong, and they can knock it down on us because it was really too fast of a move, too excitable. And I'm going to show you in a moment here on inflation, at least why I don't buy into this run up on inflation, but I also realize we've had some good earnings, and it does send a message the economy is still good. All right, so I think what we'll do now is move over to the weekly chart. And what we want to look is the equal weighted index. And this is actually very good performance. It's taken out the prior 3-week highs. So we got a 4-week high or a 3-week high is what chartists would call it. And that's something that fundamental people would pay attention to as well, saying what's changed here? We were bearish and now we're not. All right. And this is in the time frame for that level 1 bottom. We said it could actually bottom ahead of the major indexes because it started down ahead. The interesting thing this morning, the model's saying it could top for level 2 as soon as next week. And that's just because it topped out earlier than the other indexes. I think that's too soon. As I'll explain in the cash indexes, it's going to stay up longer than just next week. I think it's going higher into February for those larger trends. So we're zooming out now. I showed you level 4 for intraday, interweek. I showed you level 3 for the monthly buy-sell signal intra-month. And those level 3s that look like large moves, lengthy moves on the daily chart, well, on this weekly, those are the pops and drops every few weeks. Here's a level 3 bottom, top, bottom, top, bottom. This is what they're doing on a monthly basis. There are businesses out there in Wall Street. They have to do business every month. They got to get paid, okay? And some of them actually like it. They want to make money every month from trading. It's not so much of getting a paycheck or a commission, okay? All right, so what we're doing here is, even though things might be all over to the upside for quite some time as soon as next week, I seriously doubt it. I think we got to push this higher into next week, and I think this was also called an outside week because the lowest price this week, highest price this week is above and below the prior 4 weeks even, and at least last week, which is what most people would be looking. That's a positive reversal. They sold it, changed their mind, and they bought it great guns and shoved it higher. You triggered something there, a nerve, where they just said, hey, I know I started selling before Christmas, but I've had enough. I'm not doing it. I'm back to buying, okay? And it is above the 5-week average, which needs to turn up to give us some confirmation. And this indicator down at the bottom is oversold, telling us it ought to be limited downside and you should look for a bottom. And the model was looking, and we made the call timely, just the day before the big bang to the upside. It worked for us. But this indicator really is just barely turning to the buy side. We need a little more upside, a little more time here, pull that indicator up to make us feel a little more comfortable we've started something to the upside. All right, now we also know the percent stocks above the 200-day average for the S&P 500 recovered, and that just simply goes with that equal weighted index. It's telling us they're buying across the board. They're buying anything, everything. Okay, but it's a strange time. They're buying anything and everything. They've been very aggressive. They exploded prices, but really on a volume basis, it's really not that good a demand. They're not necessarily truly loading up, and I think the reason is the darn futures market ran the price up on them overnight, and they had to come in the morning saying, "Do I really want to buy this? This is higher than I was expecting." And they went ahead, followed through and bought some, but I think they're still holding back. Nevertheless, we'll summarize it as a nice, strong up move, just not as strong as some people are advertising, okay? At any rate, this could be a start here. And so now let's get to the actual analysis and go to the S&P 500 cash. We'll use that instead of the NASDAQ and the others. All right, we called the level 1 bottom this morning, or day before yesterday. What does that mean? It means ideally the market will go higher into April, May, June. And then it's going to sell off and maybe as much as -7 to -11% into a bottom April, May, June, July. It's probably going to be more like May, June, July, okay? And if it will drop off -7 to -11%, that's probably going to be a minor long-term bottom, and then things should get a little easier for us for the rest of the year. The market can move higher into 2026, but keep in mind these level 1, level 2s will still create some of the larger pullbacks along the way. Also keep in mind, even though I said we can get the minor long-term bottom in April, May, June, July, it may delay all the way to October. There are things that can go wrong, all right? And we're shifting this country, and one of the more important shifts that we've seen throughout the history of this country, we may break something and something may blow up on us. So there can be all kinds of issues, but in general, at the moment, it looks like there's a good chance we still got a long-term bull market. It may have some issues at times, and it looks like the economy's still going to grow anyways, okay? So that's the level 1 story. Now, here's my problem. I think with this big shift that it's going to take all the way to April, May, of arguing in Congress, getting things done, we're really not going to get the full plate of what the MAGA-nomics and Trump and Republicans want to do until really the latter half of this year. Okay, even though they're going to sign things quickly and push things as fast as they can because they know they only got to the midterm elections and then they might lose some power in Congress, because that's normally how we do it. If we vote for a president and also vote for Congress to be the same way as the president, within 2 years, we cut back on Congress. Okay, we like a good check and balance system. We do it practically every time throughout the history of this country. So they know they got 2 years, all right, to have it the easiest for them. So they're going to rush it, but that doesn't mean things can really come into play and work. And it doesn't mean they're going to work and do something fantastic immediately, and something may break. I'm a little suspicious the stock market's not really going to go to a record high by April, May, June. And even if it does, I'm not convinced that it'll be up by a huge amount. It's going to be up somewhat, and then it slips back below the prior record high, that it gives us some problems. So I'm a skeptical bull, but I'm still a long-term bull, okay? And hopefully things improve, especially by the latter half of this year, that allows me to take away that skepticism, okay? All right, so let's say we're going higher in April, May, June, but keep in mind it might not be all that grand. What's going to happen along the way? Well, with this level 1 bottom signal we gave you this week, and it's correct, we're money ahead, made way too much money way too fast, in my opinion. So it's making me wonder, what else can go wrong here? But nevertheless, it ought to be in a level 2 up move into the week of February 3rd to the week of March 3rd. And I think it'll top sooner rather than later. I think it tops in February, and it declines from February into a bottom around March 10th week of, on into April 7th, and I think I'll bottom sooner rather than later. So I basically think they'll be selling from February to March, but they ought to be buying from now into February. And all of this is going to be a fluctuation within a level 1 up move. And if you have a level 1 up move that lasts more than a month, or more likely more than 2 months, and this will, or should, then you will see the level 2 cause a setback within that up move about midway. And lo and behold, that's what the model is projecting. It's basically saying this is standard operating procedure. This is what they're going to do, okay? Now, the question is, how up for the level 2 into February? And I think it's going to be rather limited to this trend line right there to a little above it. I think it's going to be limited to last week's high of around 6,021.04 up to the high of 3 weeks ago, around 6,049.75. Let's round it off. I don't think this market's going above 60.50 going into February, and then I think it has to back off. And it might, if it backs off all the way or a huge amount, big retracement, I think that limits how high we'll go in April, May, June. I think the market will be giving us a clue. It sees problems for a while. It sees headwinds holding us back, okay? Which also may mean something breaks loose and it sees even more downside into April, May, June, and the up level one doesn't really work that well for us. And there is plenty of downside. This market can still go down below 5,800 all the way to 5,500. I think statistics show for the history of this country, we ought to have a -7, -11% down move sometime this year, probably no later than October. And it might show up in April, May, and June. It could have showed up now. Maybe something will happen any minute now, and they slam dunk it, but it doesn't look that way. I think it's later. I think it's April to October, more likely April to June is when that's going to occur. So we need to see what kind of performance we get out of this level 2 up move, down move. That'll help give us a clue of how well it's doing going higher in April, May, June. Now, what I will say, if we can get a record high price now into April, May, June, that should help solidify of limiting the downside to -7 to -11%. It won't take it away, but it'll probably reduce the chance of something worse, like 20% down, which is also allowed, by the way. And it would help give us a better clue that, yes, this market wants to go higher into 2026 no matter what happens to the country and the world, all right? It's probably going to go higher. And the stock market can do a damn good job of paying no attention if people are getting hurt or not, or what are the poor people doing. It does not care, okay? It cares about whether businesses are making profits, and it doesn't care about anybody else, all right? So they'll give us a clue it can go higher if we can get that record high. I question if we're going to get a record high now into April, May, June. I think we got to get some things done politically that impact policy, that impact the economy, the Federal Reserve, and so forth. I think this is going to take a while, all right? So I question this up move this week, as you can tell. Nevertheless, I'm with it. We called the bottom. A little bit of luck there in terms of just how fast it run. I mean, we could have waited just a few hours and missed out on this. All right, so I'm proud of that part, but yet there's just something about it. I think they got too anxious here, and I question the amount of upside. Nevertheless, we'll give them a chance to see where we are. We are bullish, and we'll see what we can do. But that's our forecast up into February, down into March, up in April, May, and there's a good chance, possibly overall, it's really up into April, May, okay? And maybe a record high, maybe not. There's just things that you can look at these lines I've drawn for you for these potential sell opportunities, buy opportunities, and take those lines and move them up and down relative to one another and kind of draw out where we possibly go nowheres, April, May, June, to maybe even down in April, May, June, versus going up. It's all on the table. It's all possible. And it just depends how the good news, bad news flows. What's the net balance? How excited do people get? And even though I realize this could be nothing but the economy and business, this time around, we got the political change. We've got a president coming in. We're starting a brand new term, and they're going to do things a lot different than what we've seen here. And so we have to factor that in as well. Okay. And we also can consider by April, May, June, if it's going down -7 and -11%, and we don't get this market up to 6,300, 6,500, it's coming all the way back down to where we are this week to even lower. Okay? So we'll time this the best we can in case you want to jump in and out, because even for long-termers who once in a while like to jump in and out, this year, or at least the first half of this year, may be one of those times you want to jump in and out and not be so bullheaded, okay, that you might pick off some extra opportunities here. But I will say nothing at the moment looks to destroy our idea of we can be bullish into next year, the following year, and the following year. I will warn you that for 10 years now, I've said we'll probably turn very bearish 2028 to 2031. We're going to have a recession. We're going to knock the market down -20 to -60%. Might even have a debt implosion finally. But I've made fun of the idea of talking debt implosion. But what I'm looking at now is if Trump extends that tax cut for the rich, that you have to realize if you look at the entire history of this country and the amount of debt we have built over 200 and some years, 25% of that debt was created in just 4 years and under Trump. 25% of it. in just 4 years compared to 200 and some years. It's huge, okay? He's talking extending that again. Billionaire Ray Dalio is scared. He says we're getting closer and closer to debt's going to blow up and bring down the country. However, if you look at Dalio's work, he doesn't know for sure, and he admits it could be decades before the debt. And I have said ever since I was 14, 16 years old when I started learning about the stock market and economies, and I remember telling friends and my father and all his business people, they were always scared of government, scared of taxes, scared of debt. And I always told them, you know what, you keep saying we're all going to work for the government someday. No, we're going to work for the government or big business, and that's it. Everybody else is dead and gone. That's looking more and more true today, okay? In addition, we look at that debt, and I've said for practically all my life that nobody can prove it. Everybody's been wrong for the history of this country when there's too much debt. We have never had too much debt on the federal government that caused a problem in this country. Never. The problems that relate to debt have been business, private debt, individual debt. Those have caused problems. Even the 1929 crash, although also was tariffs and a few other things that went on and gold exchange around the world, okay? But it was also too much debt, all right? So if we want to follow private debt and get nervous, okay. But I've said, I don't think anybody can predict it. But I got to tell you, I'm starting to get concerned at 2028 to 2031 with this amount of debt that Trump's going to extend. Maybe we are pushing the envelope too far. That if something else goes wrong, it creates a chain reaction that it finally does blow up on us. I don't think it's going to do that to the year 2050 and maybe later, and we can fix things along the road. And I think we have time. We can at least kick the can down the road like we've been doing for quite a while yet. But I have to wonder. So then I got thinking more about this and even worked with some of my affiliates. What are the possibilities of topping a little sooner? I'm concerned that instead of 2028 being the earliest year that we want to sell everything and run for the hills, okay, it might be 2027. And that doesn't mean I'll actually crash in 2020. What may occur is it's now bullish now into 2027. We make a lot of money, but it starts down in 2027, and it gets a little worse and a little worse, and then in 2028, it falls apart. And of course, would fall apart at the end of Trump's term. And it may be that something breaks with this debt, because really Trump, by extending these tax cuts, he's taken away money from the young people. He's giving money immediately to the rich, and we're going to pay for it down the road, okay? Now, of course, he's going to try his best to cut government, cut debt, and cut expenses, but it's increasingly looked like they can't even do it. Musk is even saying, well, I guess I can't cut the government $2 trillion, okay? If they cut the government $2 trillion, we're done, okay? We're going to have a recession. There's going to be a problem, so I'm watching out for that too. So this is a very tricky situation on all this debt stuff, and it's going to get trickier for years to come, I think. But what if the trickiness ends soon? I'm now saying 2027, the earliest for a problem, not 2028. But I think we still got a little time left before we stretch that rope too much and hang ourselves, okay? And so hopefully we can enjoy this bull market, make a run out of it, and not be a nuisance to people who are trying to change this country because they truly believe they're changing it for the better, and they want and they have a chance to do it. But I have my doubts. I have my questions here. So we'll do the best to keep up with this and to also remind ourselves that the stock market will do what it wants to do first. It doesn't really have to get tied into a lot of this politics, and it can ignore some of the bad side of the economy. It always has, and that's the way it does. And it's a rich man's club, and they'll do their best to ignore it. But if you really spook those rich people, they can crash this market, because after all, they own 80% of the market, okay? You got a small group that if they sell, we're done, okay? All right, in the meantime, optimistic here, moving higher, and we've got this bull run. And we're seeing people buy stocks across the board. And even somebody was out, it might have been Goldman Sachs, saying 100 and some billion or millions or whatever it was, big number, already went into the cash, into the money markets, but they said that money's coming back. And so somebody's going to buy a lot of stocks, all right? And I'm sure some people are all excited of saying, well, we're going to buy those stocks now, but what we need to consider is they might be a bit off the mark. And I'm going to stop this and find my inflation chart. Okay, so this is the Consumer Price Index for all urban consumers, all items in the U.S. city average. It's probably the more important watched one. Now, it is the total inflation. So it's headline that includes the core inflation. The reason I got a bit excited yesterday was the core inflation came down nicely, but it still doesn't excite me. And there's a lot of people complaining, the market, didn't it just get overexcited? Why did it do that? And then when you look at the headline that includes the core, and you can blame the headline firmer inflation off of high rising gasoline prices and a few other things, but we also found cheaper food prices. Whereas the core gets more into like the clothes and the things in your home, and apparently some things backed off there. But this is the year-to-year percent change in inflation. And look at this. It bottomed in September, went higher in October, went higher in November, and now, as of yesterday, we learned it went higher in December. And they bought the hell out of the stock market. They couldn't buy it fast enough, okay? Well, that's partially not correct in the sense that some were taken aback. They were saying, gee, do I really want to buy this? But some bought it anyways, okay? And they were buying all day long. They held it up. They didn't buy it, didn't pay any more than they had to. The market just kind of sat there looking what to do, all right? It was too fast of a move for people, but it was a big up move. It made headline news, right? It shocked everybody. But why did they do that? Because inflation's actually going up. It's not going down. Well, what they're looking at is the overall trend from back in 2022. It's still down. And they're looking at that really, even though we haven't done much for some time now, we're kind of stable. And they're feeling like that's good enough. And if businesses are making money, there's good corporate profits, and we're getting good earnings here out of these banks, at least making money, we have a reason to be optimistic. And we've had a 5% setback. That's normally a buy the dip moment if you're in a long-term bull market. So I think they just piled on top of one another. Old Jack's buying, so I better buy too. And old Jill's buying some more, so I guess I better buy some more. Okay, that kind of story, all right? But if you look at this inflation, it doesn't look that good to me. And even though I can see where I'm going to have to wait for about 6 months to be correct, I think inflation's working higher in the next 1, 2, 3 years. And I've said all along, looking out towards 2028 to 2030, it ought to be higher to much higher. It could be one of the problems that's going to cause the big problem towards the end of this decade of rising interest rates, kill the economy, have a recession, and a big drop in the stock market. So this is too soon to really start that big up move, in my opinion. But then as we look at some of this Trump tariff stuff, I've been saying in recent months, or for about 12 months here, even more so in the last 3 to 5 months, we can escalate that with these tariffs and bring that big up move in inflation, bring it in sooner. And I think we've started it. But it may be safer to not get too concerned with that until it trades above 3.475%, or maybe you want to round it up to 3.5%, that if you see 3.5%, that's some kind of trend change. I don't think the stock market is going to like that. So we want to watch out for that. And the interest rates may have done a good job of doing the job for the Fed, doing the dirty work, being so strong, so high, so fast, that it might be helping to hold back the inflation. But at the same time, I looked since September, and here it is moving up. So I did some research last night on some of the chat bots and the Twitters and this and that. I'm trying to figure out what are some of the big names chatting about, talking about. And there's some big names. Even Jim Bianco does a very good job of coming up with all kinds of things to look at. And he didn't flat out say people were nuts for buying yesterday, but you could tell he was saying, what the frig happened here? This inflation isn't that big a deal, and they act like this is a glorious time. This inflation is wonderful, and they just bought the stock market. Again, I think they already wanted to buy the stock market. It was down 5%, and we're going to bring Trump in, and we want to make that look good. And we know quite often we sell at the end of the year and a little bit in the start of the year, and then it's up and away the rest of the year. And we do have a 1926 analog that says in 1926 they sold in the start of the year. We're about a month to 2 months ahead of them back then. But for analogs, that's extremely close. It's almost spooky. It looks kind of the same. So it didn't look all that analog would work, because in 1926, 1927, 1928, 1929, everything went straight up. And with this AI business, there's people who believe it's so productive that it's like a 1920s, roaring 1920s. We're going to have a good time. And Trump will do his best not to hurt corporate profits. He's going to hurt a lot of other stuff because he thinks in the end he'll fix things and make things even better. He's going to do his best not to hurt business. And that's making Wall Street a bit comfortable, saying, you know what, we can ignore these things that people are worried about. All right. So we have to watch out where we're really going. And already the Trump people, not Trump, but the Trump people are saying we're going to move slowly on this tariff stuff. And some of the world is now saying they're going to move slowly on it. It will be interesting to see what happens in the next 30 to 60 days with Canada and Mexico. Because I can tell you, Mexico, God bless that woman for head of Mexico. She's on to what we're going to do in the next 20 or 30 years. I mean, she's saying we're going to take care of the middle class and poor and the hell with the rich. All right. And she's also saying we will fight the U.S. Well, there's only so much they can do because most of their economy is linked to our economy. All right. And the same for Canada. All right. So who knows where this is going? But I think this is why the stock market does not have to perform all that well into April, May, June, because we got to get started on these news things, and things are going to go bump in the night, and they're going to concern people and worry people from time to time. And I'm really wondering with this inflation, I can see it backing off here a little bit for a little while. And the bigger up move doesn't even have to show up to 27, 26, okay? But the point is it can start up this year. So this is where I'm a skeptical long-term bull, but I am still a long-term bull. I think we can still make quite a bit of money here, but we may have to be a little quick and nimble at it and not as optimistic as we were in past years. And listen, we had a great run these past 2 years. Statistically, it tells us you should not be so optimistic in the future, okay? And yet we look at where the economy is right now, it's doing great, okay? But it depends who you are. I definitely am aware of businesses and people who will tell you otherwise, okay? And that is also standard operating procedure of how an economy works. All right, so this inflation bugs me a bit here. I kind of doubt this up move yesterday and where we're going in the next few weeks, but I'm going to try to be optimistic that the stock market wants to go higher into February. And then I will trigger that signal for you in case you want to sell it. And hopefully we get another buy in March, and hopefully we will learn. It went higher in April, May. That one I definitely want to time because that could be a sizable setback, and I kind of hope it is if we get it out of the way and catch the bottom for that. And then maybe we can be more optimistic later in the year on into 2026. So I've taken you all away from the very short term, the yes, it can back off into tomorrow, the standard short term that it can actually go up in the next week and then back off a bit. And then I've shown you intermediate when it can go higher into February, back off March, higher into April. And the more important intermediate says higher in April, May. That one, I have my doubts. I wonder if we aren't really just sideways in a wide, sloppy range, that it's going to be up, down, up, but not all that up, okay? So that's what I want to warn you. It may not be all that profitable for us. We may have to get used to smaller returns here just because it was such a great run and for 2 consecutive years. I mean, think about it, 2 years, up 23% each year. That's phenomenal, okay? And yet, you can see with this AI business, with the productivity, you can see with the amount of money that could be pumped in this markets in coming years. You can see how things worked in the dot-com in the 1990s, that we could also be around 1996 here, and it went on up to 1999, something like the 1920s. There's some evidence that we still want to give the bull a chance and give the American people a chance in the economy here. All right? All right, past results are not necessarily indicative of future results. Have a great week. And we'll keep an eye on those interest rates. I'm thinking we've got a top in place and the interest rates can back off in the next few weeks, and that can help the stock market move higher for us according to our forecast. This is the interest rate chart. Backed off considerably this week, and they bought the stock market with a big bang. I want to warn you, the interest rates are at the 5-week average. They could rebound over the next few weeks and then start the down move that we want, but it might have started this week. We don't know for sure. It's just a start, But if it wants to continue to work lower in coming weeks, or at least chill out here for a bit, I think the stock market can work higher. All right, thank you.